Course, all eyes are on Ukraine. There's a lot of saber rattling going on right now. Is that rattling the markets?
Well, I mean, it's certainly having an impact. We saw that this morning with the VIX index jumping. The reality is, we've had a great run up in the stock market, and I think that the stock market's been looking for something as a reason for a pullback. Who knows, this might be it. It certainly had an impact today, but the VIX ended up not finishing up at the levels that it started the day at. So I think all in all, by the end of the day, investors were starting to sink in the information and realizing that probably what's going on in Ukraine isn't going to derail the U.S. economy.
All right, selling on the news, at least in Ukraine, but what are the fundamentals of the U.S. economy telling investors and telling you, really?
Well, fundamentally, the U.S. economy is still on pretty firm footing. It's not growing at the pace that we would really like. The fact is our clients continue to ask us whether or not this rally's over. And when we look at the stock market in general, the U.S. economy is, we've had some information that wasn't necessarily positive. For example, the jobs reports that have come out over the last couple weeks haven't been exactly positive. The ADP reports, GDP reports were a little negative. I think, though, that's the reason that you can't take a look at any one number. We have to look at it averaged out. Take, for example, the job market. The numbers haven't been stellar, but if you look at the job market, it's continued to accelerate. 2011, we had 176,000 new jobs added a month. 2012, we added 186,000 a month. In 2013, 194,000 jobs a month. So the numbers continue to show that the U.S. economy is continuing to plug along, strengthen a bit.
All right. Well, ahead of the jobs report on Friday, how are you positioning your strategy?
Well, first of all, we think that the numbers are going to come in below expectations. We think that we're probably going to have low jobs numbers at least for the next quarter. We think that first quarter numbers will come in very similar to Q4. We're expecting things to really start to pick up in the second quarter. The cold up north really has been a serious problem. I was raised in Michigan, and when you have weather like we've had, everything really has seized to a halt. And so that's put pressure on the jobs markets. Really what we're reminding our clients, however, is to stick to their long-term goals. Once again, they can't allow a negative jobs report to derail their long-term strategies. There's a lot of unknowns out there. There's black swan events like what we're seeing in Russia right now. There could be a negative economic data. We can't let something like that, however, derail our whole long-term strategy.
So you're still long-term bullish? And bullish on what specifically?
Yeah, long-term bullish. We continue to be bullish, for example, on international developed markets. We think there's great opportunities there. We're especially bullish on the energy sector. We think that there's some great opportunities there. We have some real concerns, however, when we look at the U.S. Treasuries, U.S. bonds, emerging markets. We still have serious concerns about, but we think that there are some very positive news out there.